Former Reserve Bank of India Governor Y.V. Reddy was known for his conservatism. He was an extremely conservative regulator, and he did not allow Indian banks to indulge in certain activities which he himself could not understand. That's one part of it, and there was a very strong moral suasion on behalf of Reserve Bank of India to make the banks stay away from this exotic derivatives products. Then there was series of measures by the Reserve Bank, and that's from the beginning of 2000, which actually helped the banks the system to stave off to stay away from the crisis. For instance, in as early as 2000, Reserve Bank of India encouraged banks to build a sort of investment fluctuation reserve to take care of any volatility in the interest rates. Then gradually Reserve Bank of India raised the capital requirement for the bank's exposure to real estate, to commercial real estate, to consumer loans, so on and so forth. Essentially it made money more expensive whenever in every sector, whenever it could see a bubble. So it's not overnight that Reserve Bank of India got into act, and immediately after the Lehman collapsed, it got into act and threw a sort of protective ring surrounding encircling the banks. It's not the case. It's actually it was built brick by brick over a period of time, and that actually paid. So there was hardly any kind of, barring a sort of few weeks or even for a months, the credit crisis, which was restricted to the interbank money market, because the banks lost trust in each other, and which was the global phenomenon. There was no permanent damage to the industry as such. Well, one impact is, as we see, is a distinct polarization in the banking industry. Now we have two sets of banks, public sector banks and private banks. Public sector banks which are saddled with higher NPAs and higher restructured loan, and the private banks, I think for the global investors, is a sort of banks which can do no wrong, which can recover their money from any borrower. So the perception wise, I think public sector banks are private banks are in a much better wicket, on a much better wicket now. Of course, both the perception are exaggerated, but that's what the case. Other part of the sort of fallout of Lehman crisis, I think the non-banking finance companies, that has been in the under the regulatory glare. So the normal or the smaller NBFCs, efficient NBFCs will remain, but the Indian banking sector regulator will possibly not allow NBFC to become very large, so that it becomes a threat to the entire financial system. So they will not be able to drum up the scale. Well, the big problem for the Indian banks, it's not alarming, but the problem is bad assets. They are piling up the bad assets even after provisioning. Net non-performing assets pretty high. That's point number one. Point number two, of course, because of the interest rate rise, particularly in the short term, I think on the treasury front, all these banks need to take a hit. The mark-to-market losses, they need to set aside money. And because of these two things, because they need to set aside money both for their bad assets as well as investment losses, their profitability will be hit and their capital will be eroded. So I think the biggest challenge before the regulator and before the Indian government is to recapitalize the banks. That's one part of it. And the other part is a liquidity issue. Liquidity is less. If you see progressively, between 2008 when the Lehman crisis happened and now, Indian banks credit to deposit ratio is increasing. Indian banks are giving more credit, and the deposit is not, they have not been able to gather much. Now when you have a reserve requirement like 3% CRR and 23% SLR, if you need to have more credit if you want to give, you need to have more deposit if you want to extend credit, particularly when the economy comes back to the high growth path. and we are on the threshold of we are now at a very soon we will set a new set of private banks, and Reserve Bank of India new governor has said the banking license will be on tap, which means more and more new banks will come up. So where would they get the money, the liabilities, I mean the money to be lent to the corporates and to the individuals? So I think the next round of battle in Indian banking will be fought for deposits.